Greetings. So in today's video, I'm going to talk about a put. What is a put? The previous video, I talked about what is a call. What is a put? So definition of a put in the realm of stock options. A put is the right, but not the obligation to sell a stock at a agreed price, the strike, at an agreed time, the expiration date. So I'm going to give you a story and then I'll give you the real application. A put. Okay. So Adam has a painting. He bought the painting at $10,000. So he has the painting. But the world of painting has gone crazy. There's so many paintings out there. There's lots of counterfeits. And Adam thinks his painting is a total dud. It could be worth zero. So Adam's like fearful. He's like, I'm not sure if my painting is real, if it's fake. What if everybody goes to digital products and nobody cares about painting? All of these things are in his head. He wants to buy insurance. Okay, so Bob has money. Bob walks around and says, Hey, I have some money. What do you need, Adam? Adam says, Bob, I'm willing to pay you, Bob, $5 a month, $5 to the end of this month. If the price of my painting drops below, let's say $90,000. Okay. If it goes below $90,000, so $89,999, Bob, you have to give me $90,000. You keep the $5 I gave you, and here's the painting. Okay? I'm going to repeat that whole thing again. Adam has a $10,000 painting. He is fearful that painting is going to be worthless, going to zero. He wants to protect himself and wants to assure that he has something to hold on to, in this case, money, in case that painting is worthless. Bob has money. Adam says, Bob, I will give you $5. Bob says, Really? You'll just give me $5 off the bat? He says, Yeah, I'll give you $5 if you promise to sell me a policy giving me $90,000 in case this painting is a total fake. So Bob said, Sure. I don't even know about the painting world. You're going to give me $5 off the bat. We only have to agree by the end of this month. Who knows how fast this month would go? Sure, I'll do it. That is a put. So what happened here? There is a perceived notion that the asset is going to be worthless. The person holding the asset they are not in an easy position. They feel unease and they want something to protect themselves from going all the way down to zero. They want a net to capture and they're willing to pay a premium. In this case, it was the $5 to Bob. Bob has cash. He says, Sure, I'm willing to take, well, I would love to take your $5 for no risk at all to me. And sure, I'm willing to give up the cash for $90,000. You give me the painting. Who knows? Maybe in the future that painting might be worth something, whatever the case. But to satisfy the story, that is a put. The person has the asset, fearing it will go to zero, wants to protect themselves. Person on the other side, they are the seller, Bob's the seller, selling the policy for 1 month for $5. That is the completion of a put. Okay, so here's the real application. I'm pulling up Walmart right here. That's about $120 a share. And they look like they're having weekly expiration dates. So the put, I'm going to go to at the money, which is this dotted line. The put is on the right side here. I'm going to go to the non-shaded side. That's called out the money. In a future video, I'll explain the shaded plus the non-shaded area. So we're going to look for bid. A bid is the seller. Okay, so that's Bob. Bob says, Hey, I will sell you a policy for only 36 cents. If you're fearful that the stock of Walmart's going to go below 117. The buyer says, really? Only 36 cents? Sure, I'll buy that just to have some peace of mind. So that is the whole circle, the whole cycle of a put. I hope this makes sense. That there are, first of all, a buyer and a seller. There's the asset, that's the painting. Adam's the buyer, Bob's the seller. The premium is $5 in the story, and this real application is 36 cents. The expiration is, I pulled up the 16th, so this is this Friday. Now everything should slowly build a story in your head. What are options? What is a call? What is a put? Who's the buyer? Who's the seller? What's their premium? What's their expiration date? There are a few layers, and that will all make sense to, first of all, what do you like? You want to be a buyer? You want to be a seller? Understanding time premium, expiration dates, and see how this benefits your system. We're looking for systems here, okay? We're not looking to, win the lottery. That's very risky. We're trying to build a predictable, a controllable system for you to build wealth. I'll see you on the next video. Bye.